Just let me connect my AirPods. There we go.
Perfect. You're just back home by the look of things?
I do enjoy working from home, so I'm working from home today.
Fair enough. Do you guys have kind of like a hybrid thing going on, or is it more or less each to their own based on what best suits them?
It is free range, choose your own adventure. Most people do, I would say, work in the office now, and the team is across Sydney, Melbourne and Auckland, but we do have a few folks that live in Orange and Hobart and places outside of Sydney, Melbourne and Auckland.
Awesome. No, I love that. It's very in line with, I suppose, Matt Mullenweg's ethos over at WordPress and Automatic, providing people get stuff done and the workflow suits them. That's all that really matters, and that's why it's disconcerting sometimes to see all this stuff going on in the corporate world where people are being slowly but surely urged to come back 5 days a week. It's crazy.
Good luck to them. Yep.
Yeah, exactly. Good luck to them. Mate, I've always wondered your surname. It sounds a little bit Eastern European. I'm going to take a guess. I'm going to guess Slovak or Czech.
Oh, Slovenian, which is very close. We got
the first four letters right, but we're former Yugoslavian brothers then.
Excellent. Yes, and then the pronunciation is Scevak. So pretend the C is an H, and that's how you get that.
That's it. Both parents from Slovenia, or
dad's side of the family, and then mom's side of the family, Poland and the Ukraine. So
beautiful, very, very Eastern
the general area. Yes,
yes, indeed. And I saw from your Twitter, mate. It looks like you might be a Phoenix Suns fan.
I'm a general NBA fan.
Okay.
So I always love following the Aussies, and Jock Landale had a great season with the Phoenix Suns, and in particular got like a great run in the playoffs. So I used to live in New York, so I support the New York Knicks from that point of view.
That's a bad choice, man.
I'm good mates with Mike Cannon-Brooks, and he is a part owner in the Utah Jazz, so that's also a favorite team.
Perfect. Love it, mate. Love it. Well, let's just keep on rolling, mate. You've got the full hour. Is that correct?
That is correct. Yes.
Awesome. And I mean, today, most people will know you as the founder of Startmate, Blackbird, but, let's wind the tape back, Niki. Like back when you were a teenager, say when you were 13, 14 years old, what did you want to be growing up?
Originally, I think I wanted to be a commercial airline pilot. I loved aeroplanes. I loved building model aeroplanes. I was big into radio controlled cars back then, and so loved aeroplanes and wanted to be a commercial pilot. Never that didn't last until the end of high school, because I never applied for anything to do with aviation at university, but that's probably the earliest memory I have of wanting to do something.
Nice one. Well, you're still young, mate, so there's plenty of time in case you want to do that at some point. I think it's the singer from Iron Maiden became a certified commercial airline pilot at the age of like 45 or 50, and now flies the band around the world in their Ed Force One, and it's got the Iron Maiden artwork on the side of the plane and all that sort of good stuff. So maybe a Blackbird plane in the future. It rings true with the name.
Well, nice. The name is after an aeroplane. Blackbird was the world's fastest fighter jet, and it's an interesting story from the point of view that Lockheed Martin tried to build one, spent billions of dollars, couldn't build the world's fastest fighter jet, and then a small team broke away and created what's now Skunkworks project, and built the Blackbird fighter jet, and it still remains today as the world's fastest fighter jet. I think they built it maybe in the 70s or something like that, and still the fastest today.
That's interesting.
So the idea of small teams getting something done versus the big teams not getting something done.
Absolutely. And the big teams can have all the resources and brand capital and networks in the world, but the one thing they lack that most startups possess is speed. And henceforth we get Blackbird. But picking up where the story left off, so I wanted to be a commercial airline pilot. That didn't, obviously, it's not something you pursued, finished high school, and then went off to UNSW. And you studied what I see as a Bachelor in Economics, Commerce, and Computer Science back in 2001. Looked like you were going to go up down the traditional sort of route. You became an assistant stockbroker at my old employer, Macquarie Bank, which, funnily enough, mate, I was looking at your LinkedIn, as you can tell. You were there for 7 months, which is exactly the amount of time that I was there before I jumped out to pursue entrepreneurship. What happened, mate? Why did you leave?
It was a holiday kind of part-time job, working in supporting one of the client advisors there, Clara Yago, and so it was more a kind of uni casual job than anything more formal or grand than that. So really enjoyed it. Really enjoyed getting to know the business and the clients. But I would say uni job is probably the best way to describe that one.
Perfect. Well, we'll jump ahead from the uni job, and your first sort of foray into entrepreneurship was a business called Bookmark Box, right? Which it looks like you built that and flipped it off in the period of like 12 months. It
was a crazy time. It was if you rewind back to 1998, it was the beginnings of that internet .com boom bust hysteria, and I was an 18-year-old, maybe 19-year-old kid starting my first attempt at entrepreneurship. The company itself is probably only famous for the person it was done with, which is Mike Adams-Brooks, who went on to found Atlassian, rather than anything that the Bookmark Box accomplished or was. But it was an incredible journey for me, and certainly solidified my love of technology and business and startups, and the notion that this is exactly what I wanted to do with my life. And so I learned so much through the Bookmark Box, and certainly pointed me in my career direction. But it was go to woe, about 12 months. We were two 19-year-old kids. We launched a product. We had 50,000 users, 8 million bookmarks. The idea was that you could add and organize your bookmarks across any different computer. Back then, you had a different school computer versus a work computer versus a home computer. And it also served as a signal that a page that was bookmarked was worthy of attention, and web spam was a big problem back then. And so we started getting into a kind of community search engine that was driven by these bookmark signals, but run over by the 1999 .com boom. People were raising in the US $30 million on a pre-seed round. We raised $30,000 from friends and family, and we had a knife in a gunfight, and so we decided to retire and sell to one of the other competitors. Sell is a very grand word as well. It was only a small business, and it was a successful result, but was a financial rounding error, and nothing substantial from that attempt at entrepreneurship. But as I said, the learnings and the people and the just the sense of this is what I wanted to do with my life, I will be forever grateful for.
Yeah. And I mean, it's interesting because you say back then there was a lot of spam, and this is like 98, 99 you mentioned, and that was at a time when you could game search engines by just loading the background with, say, the word cars, for example, in black text on a black background. And so if you search for cars, that would come up, but it could be a porn site or something like that. Wild time.
People basically just put online casino in the title, and they would rank for the online casino keyword on Google, which I think was, again, like Google's success was as much to do with solving that web spam problem at the time, because there were hundreds of other search engines at the time, and Google was just starting to rise up at that time.
Yeah. And so you didn't continue with entrepreneurship. You actually jumped back into the working world, or the white collar, gainfully employed working world. You had an analyst job over at Jupiter Research for a few years. What can you tell me about that, and how that sort of developed your thinking when it came to technology and startups?
It was a wonderful job in terms of the job is to talk to all of the best minds in the technology industry. And as an analyst, and we also organized events and had sort of conferences and breakfasts, and ran a few newsletters, and then the research clients. And so you got to speak to the CEOs of all of the biggest online media companies and online technology companies, and work specifically in the search industry when I moved to New York. So I got to meet all of the senior folks at Google and Yahoo and AOL and so on and so forth. So it was such a job that where you got connected to those great minds by default with the role of the job. So I think media in general was just great for learning and learning from those types of people, which again, I really appreciated and felt that I got to continue on my vertical learning journey through that role. And it's I think the only job I've ever had that I had to like interview for and actually get. So we'll always have fond memories of it.
Fantastic. I think the last one I had to interview for was Macquarie back in 2012. So going back a little while now. But that was kind of it. And then Startmate and Blackbird came along. So typically when someone say jumps into the world of say venture capital or starts an accelerator program, it could be because they built startups themselves and they've kind of got to that point where they want to help other startups grow. You kind of did that with, your first foray with Bookmark Box. You then became an analyst. I mean, what was the sort of moment that preceded that? Like, what was the seed in your mind that became Startmate Accelerator? Why did you effectively decide to start that back in 2010?
Well, there was actually one more chapter to the career before Startmate, which was a startup called Home Thinking. It did not work out. It was a real estate search engine that sort of ranked real estate agents by the past sales history and consumer reviews and so on. And through that company, I was living in New York. I was sort of visiting San Francisco on a regular basis, and so got to meet really interesting founders on that, what they called the Web 2.0 wave of consumer generated content, or these are some of the names it had back. And so I got to meet like the founders of Trulia and Zillow and Yelp and appreciated sort of like what top quality startup founders were like and how they built their companies. And so had that knowledge. I'd moved back to Australia I think it was towards the end of 2009. And so as I began kind of meeting people, reconnecting with people I'd known in Sydney, it was just this stark realization that all of the people that I was meeting in Sydney were just as good as the people I had known in San Francisco and New York at the time. And almost from the point of view of like, this is actually the best opportunity I've seen in terms of already great successful people and brimming with new interesting people with interesting ideas, and no one really paying attention. In obviously San Francisco, people pay attention to interesting startup ideas, versus in Sydney in 2009 and 2010, people were not paying attention to interesting people with interesting ideas. And so just from a great need and great opportunity point of view, that was one that was the selfish motivator. Then also, I think, so normally when you start an accelerator, you start a VC fund, you're actually successful yourself. That wasn't the case with me, but the observation that resonated was all of the best people that I'd learned from in the US were other founders at a similar kind of stage of the journey, or even one stage ahead. And so taking that and applying it to Startmate in the beginning, it wasn't necessarily that I needed to be the wizard or the expert or the know-it-all. It was build a community of other founders to help this next generation. That's really the magic of Silicon Valley when that happens, is someone starts a company, is successful, helps the next generation. And so bringing that to Startmate meant that, I, in effect, didn't need to know anything. I knew a little bit, but I didn't need to know anything, and I didn't need to be successful. And so with that approach, we could still be very helpful to companies by surrounding themselves with a community of fellow founders. And that was the beginning of Startmate. Startmate was a way for me to kind of learn investing and begin angel investing myself. It was 2 days a week for 3 months of the year in those first iterations. So it was a part-time kind of project. And then just very quickly, success is best described as like slapping you in the face. And from the very first step of Startmate, it was just very clear there was a great need, a great opportunity, and everything happened very quickly and very successfully. And so leading into that, the next step was Blackbird, and Blackbird was a way for me to become an investor full time and to channel all of my efforts into that pursuit, and certainly things have worked out from there.
Absolutely. And you're absolutely right, though. You don't necessarily need to be someone who's had a $1 billion exit as an entrepreneur to start a venture capital fund and start a successful one. Ultimately, you need to be helpful. And in terms of whether it's an individual or a company, to get the best out of someone, you've got to create an environment where they can be their best, right? Surround them with great people, give them access to resources and capital that they need to succeed, and give them access to knowledge. And that's essentially what Startmate and later Blackbird was effectively all about. And you've built this amazing network of people now, and we'll get to the team a little bit later. That's kind of more or less the foundation for the success of the startups that come through Blackbird's portfolio. But going back to say 2012, that first fund, I imagine it was what, $10 odd million back then, the first one?
It was $29 million. It took more than 2 years to raise. So we did, when raising a venture capital fund, what you can do is do a first close, and I think the first close was something like $15 million after about a year or so into it. And when you do a first close, you can open the doors, you can start investing money, and then to complete the fund, you can leave it open for another year, and then you keep adding commitments to it. So the first one was about 2 years in the making, $29 million. We had to meet 500 people. You can start a venture capital fund if you're unsuccessful, but it's quite hard. And you definitely, it's better if you are already successful and you do already have that network. It's a lot easier to start a venture capital firm. So it was a difficult beginning, but once the snowball started rolling, it all came together. And it was very hard to raise, but actually that's the perfect time to raise a venture capital fund, when this sort of cup of water in the desert moment in 2012. There weren't, as I mentioned, very many people interested in technology startups in Australia. And so when we did have the fund, in terms of like marketing, and it was, as I said, a cup of water in the desert. People came to you enthusiastically, and that was right at the time where a lot of the best global software companies were getting started. Canva was our second investment. We invested in CultureAmp and SafetyCulture and Propeller and Scheduler and all these wonderful software companies around that time. And so even though it was hard to raise, it was the best time to have a venture capital fund in Australia.
And I guess for people that are raising now or looking to raise now in this market, it's more or less the same thing, where it's a down market. Back then you were coming off the GFC. Now we're coming off, or not coming off it, we're in this down market. It's a tough time to raise. A lot of prospective LPs are seeing their portfolios of stocks get marked down, and therefore they're suddenly finding themselves with an unbalanced portfolio where they've got a lot more exposure to VC than they'd like, and therefore they might be a bit more tight-fisted. But for the right opportunity, money will always flow to the good opportunities, but it might take a bit of time. And like you said, it took 2 years for you to raise that first fund. Say for every 10 meetings you had, Niki, back then, how many said yes?
96 people said yes out of 522 meetings. So it was roughly 1 in 5 meetings people would say yes. And actually what I've realized is in any kind of fundraising, if you're a VC trying to raise a fund, if you're a startup trying to raise a round of capital, it's more an exercise of surfacing a believer than convincing someone. You don't like it's not like Dragon's Den where everyone's like super critical and ready to say gotcha and it's sort of negatively inclined. It's sharing your vision of what you hope would come true, and then seeing if that resonates with someone. And if it does, they tend to say yes very quickly. And a lot of the yeses were in that first meeting of a coffee or what have you. Even as we've raised more and more money from bigger and bigger funds and so on, it's always very clear in the beginning if someone is going to say yes or not. That's a reflection. We spent so much time in the beginning on the other thing is that you get yeses, but then you get non-yeses. So you would love to get a no. A no is a straightforward, like, hey, we met up, it's not for me, sorry, XYZ reason. That's actually the second best thing you can get from a meeting. If you get like, I'm not sure, I need to be convinced, let me dive in deeper, And then, 10 meetings later, they're like, oh, I'm not really investing in technology. They knew that at the first meeting, but the 10 meetings, or the worst is look really keen, follow up, and then eventually it sort of peters out into a ghosting, hey, just following up, seeing how you thinking about it. Can I help you make it? Is there any more information I can share to help you make the decision? And no reply, no reply, no reply. So you certainly remember those people, and the best is a yes, the second best is a no, and the worst is the not yes or no.
The counterfeit yes, more or less, or the counterfeit no, where it's not really a no, it's not really a yes, it's somewhere in between. I think Chris Voss, who wrote the book Never Split the Difference, former FBI detective, I believe, talked about that counterfeit yes, where you get this, like I've run a consulting firm for the past 8 years and selling to big corporates, same sort of thing. Like, yeah, now this sounds really good, amazing. We'll take this back to the team. We'll have a conversation. We'll talk next week, and next week becomes next year. Next year becomes never, right? And that happens so often. But the more you play that game, the more you can kind of determine who's actually legit and who's not. And you get really good at just asking, okay, if this isn't for you, let me know why. Like, why not? Is it the price? Is it the social proof? Is it we haven't done enough work in your industry? Like, what is it? So we know, so that we can get better. And but it takes a lot of humility, and sometimes people just aren't willing to ask those questions. They'd rather just protect their ego with the counterfeit yes than hear the critical, difficult feedback.
100%. Agree.
So with respect to that, so you said you raised that first fund, $29 million. Of course, since then, you've gone on and raised another 4 funds. The most recent one was Australia's biggest venture fund, from what I can tell, $1 billion Australian dollars, which is about 640 million US dollars. And that may have closed, or maybe it was publicized back in November of 2022. So like you said, back then you were dealing with, in 2012, you're dealing with high net wealth individuals, whereas now a fund of this size, you're raising from super funds, pension funds, as you might say in the United States, but basically the likes of Australian Super, Host Plus, Australia Sovereign Wealth Fund, the Future Fund, New Zealand Sovereign Wealth Fund. The landscape has completely changed. And I remember back at 2012, like the VC landscape here, it probably wasn't more than $150 million in dry powder in the VC scene. Now it's billions. What's changed, mate, in the last 10 years that big super funds are opening their doors to VCs?
The dream came true. There is a vibrant Australian ecosystem of startups. You have 2 generational companies in the form of Atlassian and Canva, which are both billions of dollars of revenue and lots and lots of free cash flow, and are unequivocally great success stories. And so when you get success on that scale, that is industry defining. Venture capital is a strange asset class where the winner, the single most successful company, defines a whole industry. And even as a rough rule of thumb, a single company in a single decade will account for the majority of returns. So if you think about Atlassian getting started in the first decade of this century, and then Canva getting started in the second decade, in each of those decades, Canva accounted for more than 50% of all of the market cap of every single startup started in that period. In the first decade, Atlassian accounted for more than 50% of all of the startups created in that first decade market cap. And so that's a strange, uncomfortable concept for people to get their minds around. There's a wonderful book on the history of the venture capital industry called The Power Law by Sebastian Mallaby. And the power law is this concept of one company counts for the majority of all companies, and then even the second best company accounts for the majority of the remaining 50%, and so on and so forth. So if you look at the scale of those successful companies, that's what really determines the size of an industry and the size of capital going in at the seed round, and so on and so forth. So with 2 clearly generational companies, I'd say Afterpay was on the way to reaching that status of a generational company, and with maybe 5 or 6 more years would have got there. And so when you have this sample of companies, people are very confident to say, let's see if the next generation of that ecosystem can produce one every 5 years instead of one every 10 years, or one every year, ultimately over time. And that's what invites more and more institutional capital, both locally and also globally. I think people recognize that you can create the best companies in the world outside of Silicon Valley, and then people are also increasingly comfortable with the notion that you could create the world's best venture capital firm outside of Sand Hill Road, and the returns of people like Blackbird and others around the world are not the best in Australia. They're the best in the world, and there's examples across Brazil and Sweden and so on and so forth of these great firms that have risen with their individual ecosystems.
Yeah, absolutely. And I think those proof points that we've had are just so important, particularly when trying to convince, or at least, as you said, surface the believers in the superannuation industry to open their wallets. And, there's no shortage of proof points in the past 10 to 15 years of companies that have gone on and reached that $1 billion valuation. Some of them have dropped below that recently, but still, whether it's Canva, who's now worth over 20 billion and reached 40 billion at one point, but Employment Hero, BigCommerce, AirwallX, CultureAmp, SafetyCulture, who you mentioned earlier, SiteMinder, the list goes on. And it's just been like every other month up until, the market kind of tapered off last year, you were reading about a new Australian unicorn. I think the most recent one I remember reading about was Immutable X in the Web3 space, which I think they were valued at about $3 billion last year. But before we go on, mate, one thing I did want to touch on with respect to raising capital. So maybe backpedaling a touch here, but you did say it was 1 in 5, a lot of knockbacks. One thing that I'm sure everybody listening to this, whether they're selling consulting services to a corporate, whether they're a startup raising capital, whether there's someone that wants to start their own venture fund and gets a lot of knockbacks from prospective LPs, that belief in yourself starts to get questioned. And we fall into what we might want to call, the trough of disillusion, or just this sense of imposter syndrome can creep in. What was that like for you? Because I imagine in the early days, there might have been a little bit of that. And how did you push through?
Yeah, I've thought about this because, people ask what was the most fragile moment of Blackbird, or what was the low point in the journey. And I don't recall any really low points. And even in the beginning, I'd say the most fragile is it was very unlikely that we got the first fund up and running. Looking back, the 2023 version of me looks back on the 2012 version of me and says, wow, that was an unlikely, lucky event that it all came together. But we didn't, back in 2012, we didn't sort of think that way. And even in the face of all of that rejection, we just felt so strongly that this was needed, and we were going to do it in whatever form, in whatever way. If it wasn't a $29 million fund, it would have been a $15 million fund. If it wasn't 15, it would have been 5. And there was just such a almost like naivety, and we just didn't think about failing, or we just thought we would keep meeting people until we got it up and running. There was just definitely that attitude. I would say in terms of dealing with rejection and so on, you should always be adjusting your pitch to new information, to questions from people. Yeah. And like a process of you're probably getting rejected because you're not speaking to the right customer profile of the product that you're selling. And in our case, most of those people who said yes were technology founders themselves that had created a company from Australia, and that pitch to them sort of appealed to their younger self, their self when they were just starting out. So they knew that this community of like-minded founders would have been so helpful in their early days. And they also knew that obviously because they had generated wealth, what a beautiful business a software company can become with recurring revenue and so on. And so I think it was understanding who to pitch to, and then who the ideal customer of that product was. We were two unsuccessful people, 3 unsuccessful people sort of pitching. We were going to get institutional funding, family offices. We didn't have any connection to general wealthy people. We didn't have any connection to. So it was really technology founders that we were having success with and just sort of doubling down. And we were very fortunate that most of those people did believe in us and introduced us to other people, and then so on and so forth. And
yeah,
the
I think
the snowball rolls.
you made a few good points there. One of which is it's easy for someone who's pitching and getting rejected to think that maybe something is wrong with the pitch, and that may well and truly be the case.
Probably is true. Yes.
Probably
so
is true.
That, yes.
Probably is true. But at the same time,
yeah.
maybe you're just pitching to the wrong audience. And maybe your pitch is actually completely fine, but you're targeting super funds when really you're raising a $10 million fund, and you should be targeting high net wealth individuals who maybe just exited from a startup. And so that's something that people really just need to reflect on. But as you mentioned, Blackbird has since gone on to make some of the biggest investments in the startup ecosystem here in Australia in the past 10 years, one of which was Canva, got in early there. Others, BugCrowd, CoinJar, CultureAmp, Fable Foods. We actually had Michael Fox on the podcast a couple of years ago as he was just getting that into Woolies and Coles and all the rest of it. Honey, RedBubble, SafetyCulture, numerous others. And I guess the question that I have for you on that, the lifeblood of any VC fund really is getting access to quality deal flow. Now, of course, you've got the Startmate accelerator, which is, I imagine, one of the pillars behind that deal flow. But what other things do you guys look at when it comes to generating quality deal flow and just putting the brand front and center when it comes to the startup ecosystem? Now, of course, it's easy to say now Blackbird's got that brand in Australia, but say you were starting again in 2023 and you had no brand, what would you do to build that deal flow?
I think, as I said, when we started, there was no capital, and to have capital was actually new and different and interesting. And so having a fund interested in that kind of company and then communicating that you are interested in global software companies built in a certain way, and sharing your philosophy and sharing your love of what kind of ambitious companies you would hope to meet, and so on and so forth. So publicly sharing what you'd love to invest in sounds silly, but lots of people don't do it. Then reputation is built. This is a great quote of not mine. Built in drops and lost in buckets. And unless you have that dedication every day of building your reputation and doing the right thing and being straightforward and believing in people early and doing what you're going to say you're going to do, unless you have a dedication to that day by day, you can't get to a good brand and a good reputation over 10 years. And so every single day, you have to have that mindset of brick by brick building a reputation and building a brand. A brand isn't what's in the AFR. A brand isn't what's on your website saying that you're awesome. A brand is another founder who's having coffee with someone that you've invested in the past, and your brand is what that existing existing founder that you've invested in says to that new prospective founder. Do they say, go and speak to Niki at Blackbird, or do they say something negative or something else, or I wouldn't recommend it, or that's the definition of brand and reputation. And again, unless you're willing to do the hard work day by day, unless you're willing to have a long-term mindset, and so many people optimize for the short term, not the long term. And that's always been so important to us at Blackbird, to live the values, not headlines on websites. It's living the values, and that ultimately creates a recommendation engine or a referral network, or and that's how you get to meet the best people and to have the opportunity to invest. Absolutely.
And when you do believe in those values and you live those values as an individual, easy enough. But as you grow your team, you bring on some analysts, some associates, some venture partners, some other general partners. Before you know it, maybe you're a team of 10, 15, 20, growing. You've got mentors in your Startmate accelerator. What's been the thinking around scaling those values and that culture that you just so well articulated?
Yes, well, you have to say what are your cultural values. You have to say what are your operating principles, and you have to live up to them, and people's performance need to be measured against them. You need to showcase people when they live up to those values and operating principles, and if they don't, you need to give them private one-on-one feedback as to where they didn't live up to it, and so on. As we've grown, also think of it as a hospitality business, and you need to measure exactly the experience that you're delivering to those customers. And so in both the case of us saying no to someone, we'll send an NPS survey a week after they interacted with a member of the Blackbird team to ask them about their experience with that Blackbird team member. It's all anonymous, it's all lightweight. But over a year, you accumulate enough sample to know, in general, are we offering a great experience to those people? Are we being respectful? Are we saying no for the right, specific reasons and sharing those specific reasons? Are we have a service level agreement with founders that it'll take us 2 weeks to get to a no and 4 weeks to get to a yes? And so are we living up to that timeline of the entrepreneur? Are we letting, as I said, are we letting them, are we saying no quickly, because ultimately there's a very finite amount of fundraising time that founder has, and they need to be spending it on the highest prospect targets. And so a quicker no is a lot better than a slower no. And so measuring NPS on different types of members of the team and categories of members of the team. And again, it's a lot of day by day, getting better and better, hard work, taking feedback, reacting to feedback, building a culture that recognizes and celebrates when people do offer a great experience, and people who want to hear negative feedback and correct and improve and upgrade themselves in future experiences. So I would say it's that hospitality mindset, and again, you can't just say that. You have to measure yourself to whether you live up to that, and that certainly we do. We do that when we say, as I said, when we say no to someone. When we say yes to someone, we also give them a more sort of in-depth survey around their interactions and how we were at different parts of the process, and we take that feedback and improve on it, and try to get better every single day.
Absolutely. And I think when it comes to taking on feedback and iterating or changing the way you do things, that requires a sense of, one, intellectual humility, and two, emotional intelligence as well. So hiring people that have those sort of characteristics so that they're fine taking on feedback, as opposed to someone who doesn't want to hear, you could have done this better, and sees that as a threat of some kind. So I think no doubt you're doing that kind of thing. But the market at the moment, Niki, obviously it's been hit over the past 12 months with everything that's going on in the economy globally, amongst other factors. We've seen seed valuations and pre-seed more or less do okay. I think pre-seed's actually gone up based on a recent AngelList report, but later stage rounds, series A, B, C, D, growth stages are coming way back down in some cases. A lot of companies with single digit valuation multiples at the moment, particularly SaaS companies. I mean, how is this? How are you guys responding to all of this? And I guess the more important question for our listeners, and particularly founders listening to this, what's your advice for founders, particularly say later stage founders, trying to navigate this storm they find themselves in?
Yeah, look, first of all, in general, today is a footnote in history. It's interesting to talk about this today. It will not be interesting to talk about today in 10 years' time. It will be a minor footnote on any kind of longer timeline arc. And so the most important thing as an investor is to not get too sad. This year, the most important thing in 2021 was not to get too happy and ahead of yourself in the good years. And particularly for those new investments and new seed round investments at Blackbird, we want to make exactly the same amount every single year. So that translates into roughly about a dozen in Australia and about 7 in New Zealand. And we just want to do that every single year and not adjust that at all, regardless of this sort of macro environment. You asked a good question at the end there, though, of those more developed companies and those sort of navigating a different fundraising kind of environment where valuations are lower, expectations are higher. So the goalposts of that round of funding have moved way higher in terms of the scale of perhaps revenue you have to have, the efficiency of the growth rates, all of those bars have gotten a lot higher. And so even if you wanted to raise at a lower valuation than what you would have raised in 2021, it's a lot more unlikely that you can. The transaction volume of growth rounds has gone way down. The number of people investing in those growth rounds has gone way down. And that is a different environment. The luxury, though, is if you are a developed company, if you have tens of millions of dollars in annual recurring revenue as a software company, you can get to break even and you can have a independent path without capital markets in general. Like if you were due to raise and you're caught short in terms of your cash balance, and you might need to raise a small amount of capital to smooth your pathway to that break even. But it's not like a sort of what is surprising is, oh my God, like people like profitability, or oh my God, like people like efficient growth. That was true in 2021. That's been true since the history of business and the history of time. And so people who are surprised that a good business is one that is growing efficiently and profitable, that's the surprising thing for me. And so in a later stage context, I would say at least there's that independent path to hopefully break even and running a profitable business. And then at the early stages, it's been less affected. I think the transaction volume is certainly down, but not by too much. And valuations are down, but by any historical standard are, paradise compared to, when we're starting out at Blackbird, for instance, in 2012.
Absolutely.
I think in 2012, as a point of reference, Instagram raised their seed round post product launch at a $2 million pre-money valuation. Airbnb raised their seed round post product launch at a $3 million pre-money valuation. So I can tell you that those valuations are not correct, and they should have been a lot higher. And we know that the right seed round price is not $2 to $3 million. And then 2021, I think, taught us that $100 million pre-money valuations for an idea stage founder is not the right price for a pre-seed round. So I think valuations of seed rounds anywhere between 10 and 15 feel right, knowing at the end of the rainbow there will be a company produced from Australia or from New Zealand that will go on to earn billions of dollars of revenue within a decade or two of their conception.
Absolutely. And definitely for your pre-seed, seed stage, even Series A startups, they've got a long sort of time horizon to exit. So if it's a good business, if you really believe in the people behind the business, what they're trying to do in the world, and they've got a good 8 to 10 years ahead of them, what's happening in the market today really shouldn't matter all that much.
And even macro from a customer standpoint doesn't matter to a seed stage startup. If you can't, the risk is all internal of what you're doing, no one cares about. And the first few $1 million of revenue are not affected by any kind of macro pullback or anything like that. It's an existential journey of, are you doing something that people care about? And sort of that initial growth is divorced from any kind of macro headwinds, tailwinds, whatever version of what it is at the day, at the time that they're starting.
Definitely, mate. And earlier in the conversation, you did say that Blackbird was not just one of the biggest or best performing Australian funds, but one of the best performing in the world. If we look at the net internal rate of return, so the annual returns on every dollar invested in your funds, it's about 56%. Correct me if I'm wrong. Which compare that to, say, the average return in the S&P 500 over the long term, somewhere between 9 to 12%, depending on. And so if I put in $100,000 and I'm getting those kinds of returns over 10 years, basically we're looking at exponential growth. That 100K quickly becomes worth 2 million, 4 million, and so on. But the question I have for you currently, and this is not just an Australian thing, this is a global thing, where to invest in a venture capital fund, you typically need to be a sophisticated investor with net assets above a certain amount or a net income above a certain amount. And therefore, that typically locks everyday retail investors out of the asset class. And so there's an argument that people make that venture capital just means venture capital is a vehicle to help the rich get richer while everyone else gets left behind. Now, in a world where people can put money into penny stocks or NFTs or things of that sort without being sophisticated investors, it seems crazy to me that retail investors can't get a piece of venture capital. What are your thoughts on this and on the regulation that seems to permeate this asset class around the world?
Yeah, look, on the regulation piece, I can very much tell you that a person with money doesn't mean they're sophisticated. There are so many rich people that I've met that are not sophisticated investors. So this definitional, like the label of sophisticated investor is just preposterous. To say that someone who, got given their money because of something that their parents did is sophisticated versus someone who works at like a technology startup and knows the need for different products and knows the market and knows who is hiring the best people in the Sydney, Melbourne, Auckland, wherever it might be. So to say that person's unsophisticated and to say the other person's sophisticated is preposterous. So I think if you want to use a word like sophisticated, then you need to tie it to an educational test, not an asset test. And so at the moment, it's like kind of rich people can afford to lose money. And that's probably the headline. But I would also disagree with the premise of the question, because I think at least with Blackbird and many others of the Australian venture ecosystem or the larger funds, most of the money, as you said, comes from the Australian super funds or the Future Fund. And if you again take that one step back, it's the millions of Australians' retirement via this superannuation vehicle that benefits from Canva's success and all of the other technology progress that comes from Australia and New Zealand. So by dollar weight, I don't have an exact figure, but it's the vast majority would be to the members of Hostplus and Aussie Super and Aware Super and Hester and Telstra Super and Care Super and NGS Super and the Future Fund, and so, like the list goes on. And so those are the ultimate beneficiaries of the success that Australian and New Zealand startups enjoy. So I do like that circle of capital, and in the end, the success is for every Australian via their retirement superannuation savings. So that's in general, but I agree for those who would like to adjust their exposure higher or to do it more directly, that's simply not possible with the sort of regulatory regime and the different sort of financial service license obligations and so on and so forth. So it does happen, but it happens through this indirect manner via the superannuation savings.
Yeah, I guess absolutely right. And that's a fantastic point about the exposure via super funds. I think it's really just if people want to increase their exposure and also access the liquidity from that exposure sooner than, their 65th birthday or whatever it is nowadays. But moving on from that question, Niki, just in the interest of time, obviously AI is a big thing. Everybody's talking about AI right now. I looked at the stats before on CB Insights. It looked like AI or generative AI startups accounted for more than half of the mega rounds in funding in Q1 of this year. So there are valuation markups in the mega rounds as well, but typically it's going to some big Gen AI startups. And I guess a question I have for you, it's probably a three-prong question. We'll try and keep the answers brief on this, but I guess the first one is on, to me, it seems like it's early with like all these Gen AI tools. It feels like 1994, we had, Ask Jeeves and all these search engines back then. And I feel like most of what we're seeing today, and I could be completely wrong, but I feel like 99% of these tools that we're seeing are going to fall by the wayside. So how are you guys thinking about this in terms of AI, investing in AI tools versus investing in companies that are really good at being AI powered versus maybe there's a third class that comes along, which is new business models we didn't even think about powered by AI? Like, what's the general sort of thinking on this new emerging class?
Yes, agree with all of those points. I would say first of all, 95% will fail, but that's the way things are achieved in the world, and people with all different diversity of thought in terms of how the world should work and different products that people need and so on. it is productive for society to attempt many different angles and many different types of products and markets and so on. So the fact that most to nearly all will fail is actually a feature of how we progress as a society, not a bug. It obviously hurts if you're one of the 95% that do fail and so on. But at a society level, the world benefits when so many people go on these explorations and journeys of discovery. Then there is sort of two different types of AI company. There is the talked about kind of OpenAI, $10 billion deal with Microsoft, titans of industry sort of budging up against each other. And that's certainly a type of AI company. And they are certainly an AI company in terms of the large language models and the foundational kind of technologies behind making what's possible today. But then a much larger category of companies is when you have this technology shift, it kind of opens a window for every existing software category for the leaderboard to be reshuffled. And so what I mean is, like, if you rewind back and we went from on-premise to the cloud, that moment allowed Salesforce to rise up to #1 in the CRM software rankings leaderboard. It enabled whoever it might be, Workday, to displace all of the existing HR software providers and rise up the leaderboard, and ServiceNow with IT service, and they rose up to leaderboard. So when a technology platform shift happens, the leaderboards of all of these companies categories get reshuffled. So you're going to see like Cambrian explosion of different companies that will build the next generation of a customer support SaaS product, or whatever it might be, because there's this chance for the leaderboard to be reshuffled. It's also why you see, you look at Atlassian's most recent user kind of product day, everything was around how they're infusing AI into their product suite. If you look at Canva Create, which is their user conference, everything was about how they're reinventing Canva with AI at the heart of it, and how AI is the #1 thing for every single employee of Canva. And so you get this leaderboard reshuffling moment where all of those existing leaders will unless they change, unless they stay ahead of the curve, they won't, they will go down the leaderboard. And then from a startup's point of view, this is their moment. This is the chance to say, here's how the category could work with this new amazing possibility of AI, and they have the chance to rise up the leaderboard. So all of those big rounds, that's in the kind of AI foundational large language model. But I think you'll see hundreds, thousands of kind of rounds that relate to an AI angle of attack of trying to rise up the leaderboard of these existing software categories.
Absolutely. And if one thing that technology's done progressively over the past, say, 25 years has just lowered the barriers to entry for anyone wanting to start a business, especially when we moved from on-prem to cloud. It just made it so easy for anyone to start a software business and scale up as they needed to with a flick of their wrist, essentially. And now it seems that with AI, that will become even more so the case, like times 100, whereby you won't need as many resources to start a company and grow a company by the sound of things. So there is an argument that some people are making, which is, well, it's like the indie hackers using AI versus the venture-backed startups. Now, I imagine the venture-backed startups are the one which is pretty much the case today, that want to build a company that's going to be, worth tens of billions of dollars. The indie hackers, they might build a nice lifestyle business generating millions of dollars, but maybe not going anything beyond that. Like, what are your thoughts on this sort of tension right now between indie hackers and venture-backed startups when it comes to AI, enabling teams of 2 or 3 people to operate like a team of 20 or 30?
Yeah, I mean, look, it certainly evens the playing field. And then, they're not separate segments of people. And even look, if you look at the journey of Atlassian, for the first, I think, 10 or 11 years of its life, it was an indie hacker business. And that was the first time that they took a round of venture capital. But the company has had a single personality across its 20 plus years of existence. And so, in some way that is an artificial segmentation, but from the point of view of like a 2 or 3 person team competing with a 100-person team, like that's the exciting part of potentially AI offering this huge amplification of what a small team can do, and you know, keen to see how it all plays out. And then also even though you had these big breakthroughs from OpenAI, just the speed in which open source projects have risen to offer an alternative, that has been mind-boggling. And so even the idea that OpenAI will be the single winner and get all the money, I actually doubt that very much, because you look at all the other software categories, it all goes to open source, whether it's a database, whether it's an operating system, whether it's a whatever, open source kind of wins out in the end. And open source, even though it's not as good as GPT-4, on a long enough timeline, open source kind of runs over any kind of closed source private company. And so even from the point of view of 2 people doing something, definitely hardware will be a cost, but even 2 people doing something amazing with AI with a $0 software cost, if they want to do it, you know, a lot of the work themselves, that's even better, I think, for the world.
Absolutely. Well said. And mate, we are almost out of time. I feel like I've got enough questions to go for another hour, but I will end it in a few minutes. But I will end with what I like to call a red button question, where we discuss issues that perhaps aren't comfortable to discuss, but need to be discussed. And, you know, I've had my run in trying to sell my consultancy with diversity quotas, and reading the Startmate website, I saw that you guys made an explicit call not to implement diversity quotas. I'd love for you to just talk through the high level thinking around why that was the case, because quotas seem to be permeating a lot of organizations nowadays, typically at the top end of town. And I think there's some really good thinking in the decision that you guys made not to pursue quotas.
Maybe not categorize it so much on that angle.
Okay.
And if you look at Startmate itself with the accelerator, it's 50-50 diversity on a gender basis. And I think Startmate has done so much more than any other in terms of that diversity progress. In Blackbird, if people want to check out the Blackbird blog, blackbird.vc is the website. We recently set out goals, not quotas, goals around gender diversity, and specifically measuring it very closely through the very top of the funnel, right down to the meeting and IC pitch and eventual term sheet and funding and so on. And so I think with anything that you want to change, you should measure it, number one, set goals around it, number two. And so if you measure it in detail, you can test hypotheses, you can test initiatives, you can measure the impact of those initiatives on the funnel and on the makeup. And so check out the blog for more in detail as to what we did as an investment team at Blackbird. But essentially, I think on diversity, it needs to progress. The way to progress, measure it first, act with the awareness of that, come up with hypotheses as to how you could change it, undergo activities to try and change it, measure those activities, adjust, you know, that iteration loop of measure, launch, measure again, launch, measure again, launch, so on and so forth.
Absolutely. And doing so in a way that doesn't compromise what we say, or what I'm reading here is a merit-based selection process as well, right? So, and
even just the Blackbird team member, how we hire, we use actually it's a Blackbird investment. First of all, it came via the investing in Applied, which is a company that allows you to run a blind recruitment process where you don't see the person's name, you don't see the person's resume, you get them to answer a series of questions related to their role. People then mark it in a team setting, and then you sort of, that next stage of the interview is when you get to know them as sort of names and people and work experiences and so on. So that blind first step has been transformational in assembling Blackbird with a cast of characters that are not from central casting, and you know, highly recommend people check out Applied if they're building their own team or hiring, it's the best way to select talent in my mind.
Fantastic.
Or even if you want to take a general principle of judge people on their work rather than, what they say, where they worked, and so on. So try to, give them a task, work on a question, work through an example, judge that first recruitment step on that. And I think you'll get a better person at the end of the hiring process.
Absolutely. And just on that, Startmate has done a whole bunch of stuff to recruit more diverse and female people, females to the table, like refreshing the website, bringing on more female mentors, running more in-person meetups and events with female entrepreneurship groups, and running outbound sales like processes to target more female founders. And that resulted in a 70% increase of applications from gender diverse companies and a 50% increase in the number accepted, which is fantastic. So I think we are just about out of time, Niki. I've really enjoyed today's conversation. Want to congratulate you on all your success thus far with Blackbird and Startmate, and hope it continues. If people want to connect with you, or maybe they're a startup founder who wants to send Blackbird their pitch deck, best place to go.
Niki at blackbird.vc, or hit me up on Twitter.
Perfect. Too easy, mate. I'll add that to the show notes for our audience. Niki, hope you enjoy the rest of your day, and thanks for joining me today on Future Squared.
Thank you for having me.
Perfect. All done, mate.
Cheers.
No worries.
Excellent. Thank you for having me.
No, all good. Do you do a lot of podcasts or?
A few, yes.